Hello, I'm Councillor Yvonne Say and I'm the Chair of the Pensions Committee and Board. Please note this meeting is recorded by the Council for live and subsequent broadcast via the Council's internet site. I'll begin by asking members to introduce themselves. Councillor Carlin.
I'm Councillor Carlin and I am a ward councillor for Hornsey Ward and a recent appointee to this committee.
Councillor Viv Ross, Fortis Green Ward. I've been on this committee 8 years, haven't I?
Anybody else?
And there's 2 members joining virtually.
Okay.
So Craig.
Yes, employer representative for Heartlands High School.
And Ishmael.
Ismail Owaris, employee member.
Oh, you'll just introduce yourself.
Okay. But they're just in time. Wow.
We are recording.
I've been in the building for ages. The door's locked, you see, can't get in. Anyway, do you want me to?
Yes.
I'm Keith Brown, long-serving, long-suffering member of this committee.
And officers, Tim.
Yes, I'm Tim McPaul, Head of Pensions and Treasury here at Haringey.
Thomas Dean, Assistant Director of Finance.
Representatives from Mercer, Steve and Alex.
Evening.
Nigel Keel, interim pensions manager.
Okay, thank you, Nigel. We've had we also have Fiona Ray
Yes, hi, Fiona Ray, Acting Committees Manager and Clerk to the committee.
and John Raisin.
John Rose, independent advisor. I've been here since 2012, so I think I'm second to Keith in longevity.
Lovely, thank
And
you.
Patrick.
And Patrick Easy.
Good evening, everybody. I'm Patrick Uses, from the Council's Legal Department. I'm legal advisor to the committee.
Is there anybody whose name I haven't called? No. Okay. We've had apologies from councillors Paul Dennison and Eldridge Culverwell, Randy Plowright. We've also had apologies from Craig Pattinson. No, yeah.
They are technically apologies because they can't be present in person.
Because they're here virtually, and Ishmael. As some members were unable to join the meeting, we are quorum now, though, are we?
No, unfortunately, you need the 2 employee members.
Okay.
We don't.
I'll carry on, sorry. As some members were unable to join the meeting in person, this meeting is technically not quorate, but it is proposed to continue informally with the meeting and to present the information to the Pensions Committee and Board members with the view to arranging an extraordinary meeting for any decisions in the coming 2 weeks. So we move on to item 3, urgent business. None received so far. Declarations of interest. So are there any declarations of interest? There seem to be no declarations of interest. Deputations, item 5, deputations, petitions, presentations or questions.
We've had none received.
Find it.
Item 6, record of training undertaken since last meeting. Anybody had any training since the last meeting?
I went to a future conference on held by GAM. Investments in the future.
Okay.
And Chair, just to mention that we did have training on property just before this session.
Oh, of course we did, yeah. Okay, item 7, minutes. Has anybody any comments on the minutes from the 2nd of December 21? The public minutes only at this point. And can we agree the minutes?
Ones that came 2 minutes before that time.
You can.
Got a pen. Was that an oversight or just one of these things that happen?
That's
we
all
move-
if Again, the minutes were circulated slightly later than usual, just because they weren't ready in advance. But as we will be meeting in 2 weeks, regardless, if people have any comments, they'll be formally signed off at that meeting. So there is time for people to review them if they wish.
Item 8, pension administration report. Can I now invite officers to introduce the report?
Thank you, Chair. The report on pension administration for this meeting is an update report where no decisions required. There are a number of items really to update the committee board on. The first is just a statement of where we are in terms of fund membership, and this it reflects really the changes that we've experienced in terms of the number of active members. We have experienced a number of people probably reacting to the circumstances of the pandemic in making different decisions about.
Sorry, mate,
Yes.
can I ask you to speak loudly, just in case?
Or you can sit here, if it's all the sound comes through this thing in the front, so you have to aim for.
Look, I'm just doing this, like, with my
Or you can
voice.
sit here if that's easy.
I will. I will, yes, I will aim in that direction. Yes, the membership numbers probably reflect changes in people's behaviour during the pandemic in terms of the decision to probably bring forward their retirement dates and take their benefits early. And this is reflected in the workflows that we've seen over the last 12 to 18 months, which are reflected later in the report. The second item regards the resourcing of the pensions administration team. As members will be aware from previous meetings, we have incurred or seen a number of retirements in the team. We have just on Sunday completed, well not completed, but we had a closing date for applications for a number of positions across the team. I'm heartened to say that we have had a very strong response to that. We have our 29 applications across the 4 positions that were being advertised. And officers will be reviewing those applications over the course of the next few days with a view to interviewing staff, potential staff, in the first or second week of April. So that's quite a positive step. It's a very competitive market, and in terms of being able to recruit into the positions across London in particular, it's challenging. So to have 29 applicants is quite encouraging. The next item is simply to note that we are in the process of re-procuring our contract for pensions administration software, which is key to our operations in terms of managing and administering the pension fund. The next item is with regard to administrative performance during 2021, which during the latter half of the year was quite challenging, given that we had a number of retirements during that period. I am pleased to say that despite that, the team worked admirably in terms of being able to maintain quite a high level of performance. They were able to maintain the volume that was required. Obviously, as the period progressed, that became more challenging as that was actually took time to the time to take certain programs. We have secured temporary resources, one from a former member of staff and one joining shortly, and that will help to fill in the gaps until we are able to fill the post substantially, which we hope to do within the next few weeks. The details about the performance levels in terms of cases cleared and performance against SLAs is contained in the appendix. Second questions. The final item is an update with regards to the McLeod remedy. We, at this point in time, we are in the process of gathering data from employees to verify any gaps in information that we may have in order that we might implement the McLeod remedies, whatever they may be determined by legislation. And we are still awaiting guidance from local associations to we actually implement them for the local communities. We are actively chasing employees at the moment to ensure that we have the necessary data so that we can enact that.
Thank you, Councillor Ross.
Yeah, thanks. It's just a question on the you said 4 positions. Is it, are we replacing 4 for 4?
No, we advertised for a pensions manager to fill that positions on a substantive basis. 2 pensions officers, a senior pensions officer, and a pensions payroll officer.
That's 6. That's 6.
Yeah. So 5 positions, 4 roles, 29 pensions.
And I understand from the previous chair that you were going to take on an apprentice.
That is still the intention. It is still there in the structure for the new team going forward. The timing on that recruitment will very much centre around how we return to the office, so that we are able to train that person in person as opposed to remote. But as you all appreciate, there is an awful lot of work going on in Alex's house in terms of how we get back into that space and have more significant presence on a daily basis in the office. But it's certainly the intention to take.
And the thing just to add to that, so it's important to bring an apprentice in when we've got the rest of the positions filled in, because that's where they sort of get the experiences in terms of the training they can get. So I think we are trying to get in before the 6 in first, and then the next stage to that would be to definitely get an apprentice. The apprentice admin is an area where we do need to bring in new people and train them up. There's not a lot of people who can do the job or experience in it. So it's something that I think would be good for us to prioritize this fund.
Any other questions? Thank you. Shall we move on to item 9 then, pension fund policy update and investment update?
Yes, thank you, Chair. I'll be introducing this item. So the pension fund quarterly investment and performance update is a standard item that we bring to almost every single pensions committee and board meeting. So the first few areas of this are kind of similar to what you'd expect and what we've reported on in the past, just providing an update to the quarter to 31st of December 2021. There are 2 separate items that normally we don't provide an update on. The first one is on the London Safe, and that's just to update members on the discussion we had from the last committee. And then the second one will be on the external audit updates, which will be a verbal update from external auditors. I think I can see David Eagles is joining us. So when we get to that point, I'll sort of invite him to say a few words around where we are in terms of that. So in terms of the investment performance itself, on section 6.2, it sort of shows that the market value for the pension fund as of the 31st of December 2021 was 1.8 billion. That was an increase of 5.62% since the previous quarter, largely driven by strong performance from private equity and property funds. I think in the appendix, confidential appendix 1 or 2 to this report, it sort of breaks down the performance, and you can see that the property and private equity returned way over 7% for the quarter, so a really strong performance. The second bit, which is on section 6.3, it sort of highlights the performance of the fund over the quarter, over the year, and over a few other periods as well. What members will note is over the quarter, the performance was rather strong. It actually outperformed our benchmark, and that was the same for the 1-year period, although it still lags a bit slightly on the 3-year to 5-year. So generally speaking, the returns of the fund are about where we kind of consider our discount rate to be. for the funding position. So this has been a strong performance for the fund over the last few years. The other area to point members' attention to is on the funding position update. This is again something we provide on a quarterly basis. I think the last update that's included here is saying 1.1%, but the latest one I got from the actuaries this morning is actually 110%. So the fund is around 110% funded, just to update members. And we sort of included a chart which sort of shows how the funding level has performed since the evaluation in March 2019. Just for members to be aware that we'll be carrying out the evaluation exercise as of 31st of March 2022, the actual evaluation. So when we get some of the other items, for example, the forward plan, we'll discuss a bit more how we intend to bring those items to the committee for review and for discussion. So in the section entitled London Safe Collective, London Collective Investment Vehicle Update, the main thing really to update is on the shareholder agreement that we had a discussion on at the last meeting. Just to update members that as of the 20th of February, 28 or 30 of the 32 London boroughs had all signed the agreement. The agreement obviously requires all 100% all the funds to sign this. So the issue is still not resolved. But I understand the London Safe are engaging with those two funds to try and get them over the line. But that's just to provide an update as to where they are. And regarding the FCA are comfortable with the progress that the London Safe has made. So it doesn't pose any more of an issue in terms of their operational side. But of course, the longer this drags on, the more it can be a risk for the fund. So just to provide an update to members on that one. So with regard to the items I sort of spoke through before we get to the external audits, I don't know if there were any questions from members.
Councillor Ross.
6.5, so it was 111% 6 months ago and 110% today. And we're having an audit or rather a valuation in 2 weeks' time. So it's unlikely to change from 110%, I imagine, in the next 2 weeks. How does that affect the valuation? Because we are, we've got 10% more than we need, basically. So how does that affect?
So I think that's a good question. So the first thing to note is the 110% is based on the assumptions as of 2019, March 2019. So the actuals would have just rolled over those numbers based on the investment performance, which has been quite strong since that period. When we come to the new valuation, forward-looking, they are going to tweak a lot of those assumptions. It's unlikely that I will stay 110% because they consider the investment performance we've had now might not necessarily be the same over the next 20-year period. So I think part of the training that we'll be providing is exactly what those assumptions are, and that'll be an opportunity for members to obviously query those or raise any questions or discussions with the actuaries. But it's unlikely that I will stay where it is at the moment. If anything, might drop slightly.
There's been a big correction in the market. So this time, as we used to have deficits there, I used to say they aren't real deficits, the same way they aren't real surpluses. It's just a way of calculating something that might happen. So I don't put much, I don't really believe in the actuarial methodology of creating a deficit or a surplus. Really. Also, now I'm concerned that because we've had a real step change in investment in the last year, Russia's invasion of Ukraine has very significant long-term effects, including commodity prices. It's an end of this equivalent to the oil price rise in the 1970s, the end of the peace dividend, so-called. And I think we ought to re-examine our strategy because we've had a long period of the US outperforming everything else, growth outperforming value, emerging markets being very poor value against, performing very badly against other assets, interest rates on the merge of going up significantly, inflation being a lot higher. Those are pretty significant things. I think we need to reevaluate that. When I raised that at the last meeting, Steve said, well, we can't do much in relation to the US against other markets. He's saying, well, we've got a passive approach. And what I'm saying is I've been here a long time, and I don't mean we've ever had a policy that says we only have passive investments. We have bought passive investments, often because we had active managers who weren't outperforming. And this incrementally pointed that. And we bought other active managements, and we've always been active about asset allocation, even if we're not being active about stock selection. So I just think it's a time when we ought to do something serious about revisiting our strategy.
So before I sort of check, it's okay before Nessa maybe come in and speak a bit more on the investments going forward. I think one of the things on the valuation is that it will inform what the new strategy will be going forward.
Oh, sure.
So one of the things that we're looking to do is look to see what the valuation is, take you sort of through that journey, and towards the end of that is when we start do the big investment review.
I'm not against valuation.
Yeah, which will of course take into account a lot beyond the issues you raised, which I think are quite key, but I don't know whether. Right.
Yeah, I can say a few comments. So just about the question about, if you are 110% funded, it would appear that you've got 10% more in assets than you need. Natural question thereafter is, does that mean you can de-risk? The answer is we need to wait and see, because what's crucial from what the scheme actually will say is what the cost of future accrual is, and that all depends on their interpretation of the expected return on the assets versus the discount rate. So just want to make that clear. So it's great to be in the funding position that you are in, but it doesn't mean automatically that you can de-risk. So this year is a valuation year. You would ordinarily sort of do a sort of go back to basics review of the investment strategy at some point, which we probably need to agree a timing on. I would have thought that could be considered certainly in the second half of this year, noting other agenda items that you've got on. And including that could include a review of the composition of the equity portfolio. Now, so I noted the comments about all being passive currently. So that has been a sort of long-standing approach of the committee, but certainly recognised there's been some changes to the composition of the committee over the years. So I don't see any problems whatsoever in revisiting the case for active management. I think that can be done in a way that is also very consistent with your general approach to sort of ESG and sort of climate change policies. And we have discussed these informally in the past, but there are two active global strategies that we think could fit with your sort of wider ESG objectives that are available on the CIV, and they are a RBC managed sustainable equity fund and also a Bailey Gifford Paris aligned global equity fund. So on the basis that you like to work and be collaborative with the CIV, there's at least two good high quality options that we could look at in more detail.
Okay, and John's got his hand up.
Yeah, thanks, Chair. A couple of points on that I'd like to make. I think first, in terms of valuations, I think Tim has sort of indicated really what valuations are. They are the view of an actuary at a particular time based on a particular set of assumptions. You change those assumptions, or you even change the actuarial firm, and you'll get a different result. So I wouldn't get too concerned about the percentage. Yes, generally, you can say we are generally well funded. The other thing I'd say is that this is an open defined benefit pension scheme with a 1/49th accrual rate. And therefore, you do need to make a fairly hefty return, in inverted commas. So I think what Steve's just said is pretty relevant. So it isn't the time ever, and there'll never be a time in the old GPS where we can de-risk. I think we can diversify to take account of factors that are coming more to the fore, one of which is cash flow issues, etc. I also think Keith's made some very good points about changes in markets, potentially about growth v-value, about inflation, commodity prices, etc. The other thing, active versus passive. We are not stuck in a position where this fund is passive. I think because of history, going back to 2012, when I first came to Haringey, and Keith is a person who knows more about this because he's here before I was, there'd been underperformance, I think, as Keith has said, by active managers, and there was a move against it. Over the time, we have gone more active, particularly in alternatives. And actually, we've become more active in equities because we were cap weighted at one time. We just invested according to a cap weighted index. we've gone away towards sort of more active indexation, and I think the last time the committee debated, it was 3-2 against going for, you know, a more vigorous type of active approach. So this has been thought of, and I think, you know, it would be worth looking at again, as Steve has said, because there may be options to go active. Those are just my thoughts.
Councillor Ross.
One of the reasons that I've always understood we're not more active is because it actually costs more to for an active manager to do the work for us.
Yeah, well, I think that is true, but I think there's been, you know, there can be an overemphasis on that. At the end of the day, it's the net return that matters. I mean, you know, let's be honest. If you want someone to do a job, you have to pay them for it, and therefore you have to pay the active manager to actively manage. But one thing I would say is that active management fees have come down an awful lot since 2012. So I think, you know, the concerns that some may have had in 2012, I would say, would be very significantly mitigated in 2022 in terms of fees. But it's not, you know, it's not the level of fee that matters so much as a net return, but fees themselves have come down significantly over the past 10 years.
You don't have to do one or the other. We can have a combination of a core position which is indexed and then an active overlay on top. Yeah, all sorts of combinations.
Okay.
The recommendation.
Sorry, Chair.
Sorry,
We're still on this item.
Okay, go on.
So I think we've got our external auditor, David Eagles, from BDO, who's just going to give us a bit of an update on where we are with the external audits. So if that's okay, Chair, I'd like to invite David to say a few words.
Good evening, members. Hello, I'm David Eagles. I'm the new external audit partner for the audit of Haringey and the pension fund. So thank you for welcoming me here this evening to provide an update on the state of the audit. I suppose the short message is that we had intended to be reporting to you the end of the audit, conclusion of the audit for this meeting, but we're not in a position to do that. We are still waiting a number of bits of evidence and explanations to support that audit. We had teams booked through to do the sort of primary work through until early February. Unfortunately, the information which we needed, or all of the information which we needed to do that work and therefore conclude for this meeting, wasn't provided before the end of their bookings. Subject to further discussions, we agreed that that information would then be provided by the end of February, and the vast majority of that was. We are working through that information. There are still quite a number of sort of queries and explanations which are outstanding at this point in time. A number are related to investments, which is one of our sort of key significant risk areas, and issues also related to bank reconciliations and also some benefits work. We have got people coming on site tomorrow to try and resolve some of the benefits issues. Part of that was hindered by access issues. We have, however, got a majority of the explanations we need from the actuary, who we met with a reasonably successful meeting last week. So lots of things going on. I understand in terms of delivery of working papers and so forth, that the team has been sort of hit by some of the sort of resourcing issues that were referred to earlier on. So we do appreciate that Tim and team have been working sort of very hard to get us that, but it just didn't quite hit that particular point. So in terms of where we go from here, we have agreed that we will aim for the next meeting in July to report. I think we'd very much hope to get the sort of pension fund out of the way before we hit our NHS peak period, but that's not been possible. So we'll be aiming to report in July. For wider context, the main council audit is subject to a national issue on the accounting and carrying value of infrastructure assets, which I won't go into in huge detail. You don't need to know that, but basically there have been issues that have happened in the way that councils across the whole country are accounting for that. So it's not a particular issue or particular problem for Haringey, but it is an issue which needs sorting out. And at the moment we are waiting for SIT4LASAC, who develop and produce the accounting code for local authorities, including for pension funds, to provide some updates and further guidance, and that's going to take at least 2 months' time. So we are also, with the main accounts audit, aiming for July time. And just one final point of administration. members may well be aware that we are unable to sign off the pension fund accounts until we are also in a position to sign off the main audit accounts. So if there are ongoing delays with this infrastructure issue, then that could impact on the timeline with which we can actually finally sign off on the pension fund accounts. But I just want you to be aware of that, so it's no surprises, just in case that does happen later on. I'm more than happy to take any sort of questions on the position we're at the moment, if members would like to ask any.
Councillor Collins.
It's Councillor Carlin. The delays that you have in getting the information that you required, is there anything that we as a pension committee can do to assist with that?
I think well, my guess is the large issue is that it's a resourcing issue, which is something you're already talking about and you're already dealing with. So I don't think there's any sort of further issues. I mean, we've been talking to senior officers, had some a couple of meetings now with John Wallow, sort of face to face, well, virtually face to face, to talk about how we deal with things and prioritising. And as I said, with the initial sort of missing that cut-off point with the team being around, we had a discussion that did involve John as well. It was agreed we get things by the end of February. The vast majority of that was delivered by the end of February, so we're sort of getting a bit back on track. However, the key issue now is that we need to get the responses, explanations, further working papers or reanalysis of things as quickly as possible, so that our audit team can deal with those and process them. But I'm sure Tim's on the case already.
Yeah, so Councillor Cameron, just to add to that, I think one of the key issues is around also the type of queries you have and some of the third parties that we have to interact to get the queries. So as you members will be aware, the accounts IS last year, there's a lot of things in terms of like some of our investment managers, particularly in the private equity, where it takes them some time before they can actually have their final statements. Given that the auditors are coming in at this point in time, would have to then go back and confirm those figures with the fund manager, and then they require some changes. So there are a few things that as you sort of answer one query, there are new queries that come up. So in as much as, yeah, we are doing as much as we can to get those queries across, it's likely that there will be more follow-up queries to just clarify and to agree with the auditor. So until David and his team get the reasonable assurance, then people ask questions, and we can just revert back to them as quickly as we can.
Any other questions?
No.
Okay, the recommendation is this report set out on page 11, paragraph 3.1, to note the information provided in section 6 of the report in respect of the activity of the quarter ending 31st of December 2021. This item also has some exempt information in the exempt section of the meeting. Both parts are just to note. No decision. So we move on to item 10. Updated CIPRA guidance and Haringey training policy, pages 21 to 42. Can I now invite officers to introduce the report? Tim Pofu, Thomas Skin, John Raisin.
Thank you, Chair. So I would just do a brief introduction on the paper. John Raisin, our independent advisor, is going to take us through some of the detail in terms of what's being proposed for the committee. So again, I think this is one of the items that we have brought up to this committee with a view that there will be an agreement. There are sort of two things that this paper seeks. The first one is that the Pensions Committee and Board adopt the CIPRA Pensions Knowledge and Skills guidance, which was issued in June 2021. This guidance essentially provides a framework as to how training and members can go about acquiring the knowledge to be able to carry out their duties appropriately. Aligned to that same policy would be a training policy, which we thought would be a good idea to get this approved before the new cycle, which would then allow us to put in place an annual training plan, which would come to the first meeting, which would be the July meeting, and which would outline some of the training that we can carry out for members and also for senior officers in the fund. So these are sort of two key areas in terms of the responsibilities, as you will be mindful. This is an ever-changing area. One of the main things I've already mentioned at the moment is the actuarial evaluation, which we need to provide members training on, and there will probably be training on all different types of asset classes, but also on the roles and responsibilities of being an LGPS or local government pension fund member of the committee. So the paper itself, the first one, is just sort of referencing what the CIPFA frameworks discusses. That is contained in Appendix 1, which John again, I think, will talk through in more detail. The second paper, which is Appendix 2 to this paper, or the second report, is essentially the training policy that's being proposed. So on section 6.8, there is a bit of a summary in terms of what is actually being recommended by the training policy. There are 4 sort of key areas that we think will be good to put into a policy, and then that will help sort of shape the type of training that we provide to members, but also help shape how we deliver that and how we monitor that on an ongoing basis. Some of the areas are monitoring and reporting of training. These are legal requirements, so we need to be making sure that members are being trained, but also able to report on that training that they're receiving. So without going into too much detail in terms of the different areas, if that's okay, I'll hand over to John, who maybe talk us through in more detail of the report.
Yeah, thanks, Tim. I think this officer report and the 2 papers that I've prepared on issues of pensions, knowledge, training and skills are really of the utmost importance, both to members of the Pensions Committee and Board as individuals, but also in terms of the effective and good governance of the Haringey Pension Fund as a whole going forward. Turning to the first paper, which is pages 25 to 33, which is called Approach of the Pensions Committee and Board to Training and Update on CIPFA Knowledge and Skills Guidance. In essence, as Tim's indicated, this paper updates the committee on board in terms of 2 papers that CIPFA issued in June 2021 and proposes that the Haringey Committee revise its approach to training in accordance with those 2 papers. And the second paper that I have prepared on pages 35 to 41 in conjunction with Tim is the actual training policy. Remaining with the first paper, I mean, essentially I covered the background of the past on pages 25 to 28. And I have to say that the Haringey Fund has had a good approach and a positive approach to training, knowledge and skills for a number of years. That began in 2013 when you first adopted the then CIPFA approach. And that was updated in 2016 when the committee and board were formed, because the committee at that stage asked me to go away and have a close look at how we could approach training in the terms of a joint committee and board, which has different responsibilities to where you have a separate committee and a separate board. And we put that framework in place in 2016. But that has now, I think, been superseded by the latest CIPFA guidance. CIPFA issued these 2 papers in June 2021. The code is, in fact, the first updating of their code of practice since 2010. Now, the world of 2010 is unbelievably different in terms of LGPS than the world of 2021 or 2022. And these new documents do reflect the really big changes. I mean, I think CIPFA actually refer in one of the documents to unprecedented changes and challenges of the past few years, and that these are likely to continue into the future. And I think a big example of this is the MiFID II change of 2018, which of course was after our last revision of 2016. Until 2018, this fund, like all LGPS funds, was regarded as a professional investor. As a result of MiFID II, the fund is no longer automatically a professional investor. You have to prove professional status by proving competence. Now, this is a collective effort, the guidance says. That is the collective knowledge of the officers and the advisors. However, ultimately, the committee and board are the decision makers. So you cannot rely on Steve, Alex, Tim, Thomas, myself. You also have to be up to speed. So it's a collective approach. So that's why the training policy is so important to be updated. I think page 7 of this code says that CIPFA expect every administrative authority to adopt it, and it's underpinned by 5 key principles, which are on pages 29 and 30, and also 7 statements, which I talk about on page 30. So what this paper proposes is that you adopt the code of practice. Then also at the same time they issued a new code of practice, CIPFA issued a revised knowledge and skills framework. And this again replaced the document of 2010. Sorry, the code actually was 2013, I'm sorry. It's just been revised. It was 2010 is the knowledge and skills framework. The new framework identifies 8 core areas, which are listed on page 32. And this I suggested in the training policy forms a core of how we structure and look at training going forward. That 2021 framework also covers, as Tim's alluded to, guidance on the delivery, monitoring and reporting and compliance of the knowledge and skills framework. And that is then covered in the second paper that I've done, which is on pages 35 to 41. So this sets out the policy regarding LGPS knowledge and skills, and it applies both to members of the Pensions Committee and Board and senior fund officers. And I would say this policy is very much based on 3 documents. Firstly, the CIPFA Code of Practice of 2021. Secondly, the new CIPFA Knowledge and Skills Framework for committee members of 2021, but also the 2015 framework for pension board members, because where you have a separate committee and board, as most LGPS funds do, they are subject to separate guidance. But because you fulfill both roles, you're covered by both guidance. So I've brought in that 2015 guidance as well. So the policy before you includes the 7 statements from CIPFA, which they recommend should be included in the training policy. The policy aims and objectives on page 36 to 7. The fact this training and the policy will adhere to relevant legislation and guidance. There are the competencies on page 38 to 39, which are derived from the 8 core areas of knowledge and skills that CIPFA have identified. And then we cover delivery of training on pages 40 to 41. One thing I would point out to you on pages 40 to 41 at 6.4 is that members of the Pensions Committee and Board must complete all modules of both the Hyman-Robertson Online Learning Academy and the Pension Regulators Online Public Service Toolkit within 6 months of appointment. Now, it isn't that is something which is perfectly doable. These are not difficult things to do. They are things that take time to go through. But if you go through both of those, they will give some background knowledge, and that will be supplemented by the other initiatives that I mentioned in the policy. That the one thing I would say is that we will be closely monitoring and reviewing training in future. That's a big change in the new CIPFA framework from the past, and I think it reflects the fact that pensions has become far more complicated and the legislative and governance background far more rigorous than it was back in 2010 or 2013. So, you know, there will be a self-assessment you'll need to do. Attendance at training will be recorded, and in accordance to the CIPFA guidance, records of training will be included. So members will be, you know, their training record will be included as part of the public annual report going forward. And in terms of reporting and compliance, the CIPFA guidance requires that a named officer, in this case it will be Tim, as head of the fund, is responsible for monitoring and ensuring adherence to this. And in accordance with that, it's pointed out on page 40 of the agenda that there will be regular reports at least twice a year to the Pensions Committee and Board, and that Tim will be, you know, reporting that and monitoring that. So it does need to be taken forward, you know, pretty seriously. So those are the 2 reports, but particularly the training policy. As I say, it's perhaps unfortunate we can't approve it tonight, but I would urge, if possible, that be approved, you know, before the recess, so that the new committee and board members, when they come in, are very aware that they have, you know, significant obligations in terms of knowledge, skills and training to be able to function effectively as members of this committee and board. Thank you, Chair.
Thank you. I've got a question about the courses have to be completed within 6 months of appointment. What happens if they aren't?
Well, we trust they will be. What I'd say, Chair, is that I do not believe that anyone who sets out to do these, you know, and set some time aside, won't be able to complete them. As I say, that they don't need, you know, any knowledge or past knowledge of investment or governance or pensions admin. They just need application. So it's not a test per se, although there are tests within them. It's a matter of people applying themselves, and anyone who reasonably applies themselves will be able to do it. And I don't think it will take up, you know, an inordinate amount of anyone's time.
And it tells you all the information, and then you just answer it back to them. So
Yeah, if you have to get it right.
yeah, but you have to read it, understand it, but it's, you know, they tell you the answer first.
We've got any other questions or comments? Councillor Ross.
Always do. Thanks, John. Page 35, This is setting down our policy in what's expected of us as members in regard to training. So on the first 1.1, it says senior officer of the pension fund. Is it only the senior officer of the pension fund who has to use covered words?
Well, there should be officers.
Good, that's a typo, good, I got that one. And then 6.1 on page 39, the last bullet point. I presume then that should also read senior officers.
Yes, it should.
And my third question is 6.4. Hines Robinson online training. I've not come across that before. Is that new?
It's fairly new, yes, and it's been fairly widely taken on, not including by funds who are not Hyman's clients for either actuarial or investment consultancy. So, you know, I know you are or Haringey's for actuarial, but I work with another fund which doesn't use Hyman Robertson at all, and they've used it. I think it's been fairly well regarded as, you know, an introductory, broad-ranging online training approach. But what we will be doing is supplementing that, as I've said earlier on, Councillor Ross, with training which is very specific to Haringey. And you know, that good example again tonight was the training that Alex has delivered. So it will be a mixture of general training such as that, and perhaps some general training delivered by myself, perhaps as in the past, but also Haringey specific training.
My last question is really a political question for the chair. We agreed under the previous chair that the whips would keep the same people, if possible, on the pensions committee because of this, because of the level of training and knowledge. And I just wondered if we can agree that we go back to our whips and say that policy is going to carry on in our political groups, but also is there something we could put into this to say that because it's such a high level of expertise and training needed that I don't know what the wording is.
Unfortunately, that doesn't recognise the political realities. You know, the previous chair got promoted to the cabinet.
Yeah, I understand that, but there's been other councillors who've come and gone on and some councillors don't turn up as well, as I said yesterday, for council. So I mean, it's, you know, we're talking now nearly £2 billion worth of assets. It's a lot of money. And there's a sort of a churn of councillors.
Well, I mean, I think certainly, I think we can speak to the chief officer in terms of, I sit on the board of Homes for Haringey, for example, and that's acknowledged that you sit on the board for a 4-year term, unless, you know, obviously still things happen, such as, you know, people get promoted to cabinet or whatever, but it doesn't change annually at all. That committee says the same. And I know that that board says the same, and I know that Alexander Palace are thinking of doing a similar thing to Ali for the same kind of reasons, that you need the continuity because it takes you a bit of time to get up to speed. So, you know, I'm certain that we can speak to the whips and put something in place put something in place to.
That's a really good idea.
To actually say that you sit for a 4-year term. Obviously, you know, the chairs might change, you know, things might change. But you know, other committees, I'm saying we do other things.
We had an agreement with John Bevan when he was chair, and we put something in writing, didn't we? That the chair of the committee wrote to the whips. At the time, I think it's about 3 years ago, was it maybe something like that?
It was 4 years ago.
4 years ago.
I think the committee may have collectively addressed a letter to both the whips, as you said, councillor.
And I wonder if we could resurrect that letter and just the whips after May the 5th. That's my.
I have great sympathy for councillors here because this is a very, very technical area. And I think the issue for us has been times a number of people have come along with trying to find an agenda which is not necessarily in the interests of the pensioners.
A number of people or what?
Well, somebody springs to mind.
I'm not saying a word, but I think we all know what I mean. And it's that kind of situation where you're just wasting a lot of time.
Yeah.
At the start of every year, with saying, explaining why that can't be done, why that's not first priority.
And why, for instance, we've had a passive as opposed to an active over the years and that sort of thing. You have to retrain people.
Yeah, yeah.
Anyway, that's my point. Thank you.
Nature of democracy as well.
Well, yeah.
Some people just don't get elected. So, you got any other comments? No?
That's good.
Okay. Recommendations for this report are set out on pages 21 to 22. We can note the independent advisors' papers, but we can't agree paragraph 3.2 and 3.3 as they're not quorate. This will be addressed at a future meeting. And that's the to approve the adoption of the CIPFA 2021 Code of Practice on Local Government Pensions, Knowledge and Skills as outlined in Appendix 1 to the report. The adoption of this 2021 Code of Practice will be applicable to Pensions Committee and board members and senior fund officers. And the second one is to approve the training policy for Pension Committee and board members and senior fund officers of March 2022, attached as Appendix 2 to this report. So we'll go on to item 11.
Before we go on to that point, can I just get a view from members whether they are minded to agree to those changes before we bring them to the next meeting?
Well, I have no problem with it, yeah. Badminton, certainly.
Thank you.
Okay, item 11, local authority pension fund forum voting update.
Right, thank you, Chair. I'll be introducing this item again. So this is another standing item that we'll bring to this committee on a regular basis, and essentially just provide an update on the local authority pension fund forums, engagement and voting activities on behalf of the fund. So what I've sort of provided in the report is just a bit of a background on what the organization does. What members will note is what's different from this particular report is there were no actual voting alerts issued in the last period. That actually focused a lot of their attention to writing to chairs on a proposal called Say on Climate, which essentially requires all the FTSE things, the entire index, all the boards to outline what their strategy is to net zero as a business. So this is essentially, they have to come up with a plan and then the plan has to be voted on. So they're just putting forward a proposal for companies to do so. So what you see on chart 6.3 is a breakdown of that activity. And yeah, a lot of those would have been letters that they said. What we expect over the next few months is for now to see what the next stage will be as the companies start responding to those letters. My understanding is some of them have already responded and articulated how they plan to do that at their next AGMs. So I can assume that there will be a lot of voting alerts, making sure that this issue is actually included on many company boards. So it's something that's quite interesting for members to be involved in and to sort of have sight of. And one thing I'll just like to add on to this is a lot of the stuff I got is from the LAP website. So they do a quarterly update report, which provides a lot more detail in terms of the engagement that they're doing. I think it's a really good, interesting resource where members of LAP, they engage on our behalf. So I just encourage them.
Does everybody get all the emails? They send me pretty much every day.
And we'll be worth checking whether everyone does get.
Because I think if you read a small amount regularly, you get more sense of trying to read a lot occasionally.
Yeah.
I don't get them, I just get this.
Oh, you should get the emails, I'm sure. Sure.
Perhaps.
I suspect we all got the emails, and I'm the only one left, and nobody's updated the emails.
If members are interested in receiving those emails, yeah, we can look into getting you on the mailing list. They do offer webinars as well, where they talk to different parties that they're engaging with in South America and all around the world. So I think it's really good.
I think it's very helpful for people. If you read their little notes, you see what's going on. I think everybody will find it really helpful.
So I'm happy to take that as an action.
Okay, so we note the report then. And item 12 is the risk register.
Yes, so item 12 is the risk register, which again is one we bring to the committee on a regular basis. What we tend to do is bring a different area of the council that we review for risks. I think previously we brought one on funding, I believe, and we brought another one for investments. But this time around, we thought it would be proper for us to bring one on investment, given all the geopolitical risks and things that are currently going on. So what members will note from this report is on section 6.4, I've included a bit of a RAG rating and a scoring, which shows how the reports that are actually in the appendix are scored. One thing to note is I did note there is a typo there. It's supposed to be from 16 to 25 is what considered is to be read. 15 and 10 is an amber risk, which is usually something that we think is not a key risk, but someone to keep an eye on. And then green is usually a risk that's under control. So when members are sort of reading those reports, that's kind of the background in terms of how we score them. But of course, we'll bring this to this committee for you to sort of challenge that, where possible, we can adjust the risk or add a few more mitigations. So on section 6.5, I've included a few of the high risks that I think are worth bringing to the forefront of members and perhaps to discuss, or if there's anything further that needs to be done. The first one is on the invasion of Russia into Ukraine. There are obviously a lot of follow-up sort of implications of that. The initial one was regarding what our investments were and what would happen to those investments. So just to point out, we had a very small exposure. The exposure was actually 0.09%. But since then, there has actually been an update from the index companies where they've essentially deleted these companies from the index. So what it means is, yes, we do suffer a bit of a performance in terms of the companies in the fund, but just for members to be clear that the actual investment is with the fund, which is managed by Legal and General, and they are the ones that are probably taking a lot more loss and trying to figure out what exactly is for those investments. So for the meantime, they've written those down to zero, but should the situation change, should the sanctions get lifted, they'll issue a bit more guidance in terms of what that means to those investments. But the immediate impact is, yeah, there is a bit of a hit on our performance. But given the size, that hit is probably not as big as the overall drawdown in equities, which we read before is around 10% since the start of the year.
I think the problem is on Russia specifically, it's on markets generally and a new environment, which does create risk.
Yes, so I think depending on how long the situation goes on and what the actual implications of the sanctions will be, that's something that we just need to keep an eye on, and it's something that we're actively engaging with both MERSA and directly with our investment managers. The second one is on inflation. And just to note that the Bank of England, I think they have another meeting, the MPC has got a meeting on Thursday, where they are widely expected to raise rates. They may not, but the expectation is that they will. And the last meeting that they did mention that they think inflation is going to peak at 7.25%. So given the training that we've received today around the implications of inflation, we don't know how inflation is going to be around for. There are some mitigations we already have in the fund in terms of our index-linked gilts, our property investments, our renewable infrastructure, but it might be another consideration for the pension fund, whether we need to do more. And again, that's something I'll take advice from our advisors. So I think on those, before I sort of open up for questions, I don't know whether Mesa wanted to speak on anything in terms of the high risk that I've identified that relate to investments.
So Tim, I think you've covered everything on the sort of Russia exposure. So the only exposure you had was due to the sort of index tracking element, and we'll need to maintain a watching sort of brief on that. But clearly, those assets would be have been written down to zero. In terms of the investment strategy review, one of the things that we would propose doing this year is looking at scenario analysis and looking at how the long-term strategy is likely to perform in different environments. And we think that is particularly pertinent to what's going on with the geopolitical situation, because we do think the risks of a stagflationary environment have increased quite a lot. So that's an environment where a high persistent inflation and slow to negative growth. And that's quite an unusual scenario to be in, because we haven't experienced that since the 70s. So there's probably not that many committee members, investment managers, or dare I say investment consultants who have been through that environment.
I have.
I knew because of the benefit of your experience.
I'm old enough.
Yeah.
I was very young at the time. But see, in the wacky world of actuarial calculations, a rise of interest rates may actually increase our surplus because they may raise the discount rate and therefore reduce our liabilities. Meanwhile, our assets are falling, but that would turn out to be an increase in assets. So that's why I'm very sceptical about that calculation.
Yes, I mean, that's sort of my idea. I don't know if there were any questions.
Councillor Ross.
You talk in 6.5 about exposure to Russian funds as being 1% or 0.9%. That's not our exposure of our fund, because if it were, it would be about 1.5 million in cash. Is that, what does it mean if the Russians go down to zero, or not the Russians, the investment in Russian funds? What does it mean if that goes down to zero?
So essentially, if it goes down to zero, it means that the value of those investments in the fund that we're invested in would also go down to zero. So what you find is the performance will be impacted over the, so this happened it happened in March. So the March report will have that 1.5 hits in terms of the performance, but those assets are still held in the fund, just at zero. If the situation was to change, that will be a decision now for legal in general in terms of how do they value those. It's likely that these assets will not be re-included quickly into the index. So essentially, legal in general would sell those off, and we might get some sort of rebate for holding those units when they went to zero. So it's not clear what legal in general are planning to do, but essentially they are currently holding those investments at zero. And if that changes, so it's not sort of like a write-off, it's more like a performance investment. If you imagine that the fund in January was worth, let's say, 3 million, it's now gone down to zero, but it's still there. There's a unit that represent that ownership in that company. It's just at the moment you can't obviously measure it because you can't trade it.
There's no trade.
You can't trade it.
And another question as well. In the next block, we talk about CPI inflation, and there's always a question about CPI and RPI and what the government thinks of inflation. Recently, there's been a talk about a new criteria for inflation based on what Jack Monroe has said about real inflation and how it affects people, you know, who are sort of not fund managers, but they're just normal people, and their food prices are going high, and power energy prices rocketing, petrol rocketing. So RPI, CPI don't really measure those very well. So is the government actually going to bring in some sort of new real measure of inflation?
Not to my knowledge. I think the reason why we reference CPI is that's the one that's linked to the pensions liabilities. So in terms of the pension increase every year, it's CPI as of September.
Yeah.
So that's the one we sort of keep an eye on. But yeah, there are numerous ones that, to my knowledge, I don't know if anyone can correct me, there is no sort of proposal to change that.
They're not actually.
They will avoid it because that number would be a lot higher.
That's the point. That's the point. Yeah, I mean, petrol's gone up like 30 a litre or something in the last month. Okay, thanks. That's all my questions.
Any other questions? So for me, recommendations for the report are set out on page 47 to note and provide any comments on the pension funds register. The area of focus for review at the meeting is investments. We move on to item 13. Can I invite officers to introduce the report? Forward plan.
Yeah, thank you, Chair. So this one should be a relatively quick one, the forward plan for the next few months. So we brought this to members just to get some feedback and comments in terms of what we've included in the core plan. If there's anything that you feel we're missing in it, particularly, I think we've discussed about training. I'd welcome any inputs in terms of training that you feel we need to deliver or refresh members on, but also on any other items that you feel might be worth discussing in future meetings.
The only one I had was no time with Robinson online training.
We'll add that under July. It's not welcoming for you guys. Yes, I think the only thing I would sort of highlight is in terms of his evaluation here. We are hoping that we'll be able to have an initial proposal, initial training from the actuaries in September. We'll then be looking to get the results either in November or in the January meeting. But in between that period, we can start then having those discussions such as that would be raised by Keith in terms of the investment strategy. So it's just to make members aware of that sort of train of progression that we'll have to go through over the next 12 months or so.
Any comments or questions? Recommendations for this report set out on page 55 to identify additional issues and training for inclusion within the Pensions Committee. We go on to item 14, property portfolio review. Can I invite officers to introduce the report?
So, Chair, before we get into this report, this forms part of the exempt agenda. So I don't know if this is now the time for us to.
So if there's any public questions or public sections that you want to go through, then now's the time. If not, we'll just have a couple of other standard items and then we can exclude the public. If it's easier to deal with everything in one go in the exempt part, we can always do that and put any publicly available information into the public minutes.
Yes, I think for the public, I'll just say the cover report sort of summarizes what will be the context of the discussion. But I think it would be easier for us to have that in an exempt session.
Okay. Are we doing that now?
So there's just to check if there's any new items of urgent business for anybody to raise. No, that's fine. And then to note the provisional dates of future meetings, which are listed in the agenda. Just for information, and then we'll move to the exclusion of the press and public. So for items 18 to 21, those items will contain exempt information as set out in paragraphs 3 and 5, part 1, schedule 12A of the Local Government Act 1972. Is that agreed to exclude the press and the public? Agreed. It'll just be a few minutes while we exclude anybody.